commentary, which has given the street comfort. If anything, if you read all the brokerage notes, they're all saying that the management is still sounding uncertain. They're not calling out any recovery, any pickup in growth. They're saying, as of now, we don't have visibility about the near term. The long-term picture is very good. It's a lot about the pre-positioning. The stocks had gone into the earnings a bit subdued, especially in the last 3 months. Forget the last 2-3 days. In the last 3 months, IT stocks have hardly participated in the 20% up move that we've seen, and that is now. So there is, in a way, some relief that the demand has not deteriorated. This has been a weak quarter, but on expected lines, there are no big nasty surprises like we had in the case of Q4. And in the run-up to the earnings season, there were so many brokerages like JP Morgan, Morgan Stanley, Jefferies. They were all downgrading their assessment on IT. And they were saying that, this is a cyclical slowdown. Even a 6% growth looks, undoable. Maybe these companies are going to be doing 5%. So I think, the street was prepared for a much worse number. This has been in line with the consensus numbers, but it's not the bearish estimate on the street. And I think that's being rewarded. In terms of the management commentary, it's more of the same. No big cancellations, no big ramp down. Near-term outlook is a bit subdued. The projects which are not critical to the company, which have a low return on investment, those are being put on hold. There was one point that Samir Seksaria, the CFO of the company, told us when we asked him that of all the projects that were put on hold in the March quarter, what has happened to them? And he said few of them, some of them have been put on hold indefinitely, but most of them have seen a reduced scope of work. So it's not that things have rebounded on the projects which were put on hold. As he reiterated, most of them have seen a reduced scope in work, but they have restarted. Another point that I found interesting is that in the 3 verticals that were weak, high tech, telecom and banks, right? This time they articulated what's hurting on the telecom front. He's saying that telecom companies made a lot of investments in 5G, but they haven't seen revenues commensurate with their 5G investments, and therefore now they are turning a bit cautious or scaling back on their expenditure. So this is something which was a bit of a revelation on why telecom has been weak across the board for the industry.
Okay, so that's the TCS story. Explains the excitement on the stock now. Buyers are queuing up. But HCLtech, HCLtech one really thought because for TCS, I think one very solid number was the quarterly deal wins because that remained above $10 billion. For HCLtech, I remember looking at all the numbers you sent us, that it came down from $2 billion to about $1.5 billion. And then their ER&D segment has seen a huge decline, 5% decline.
Quarter on quarter.
Quarter on quarter. But still, look at the stock.
Well, HCLtech won. I think we should pull up a 1-week chart of HCLtech. If you could get that, you would see in the last 5 trading sessions, the stock fell from levels of 1,200. It went down to 1,100s. The street had, in a way, priced in very negative numbers. There you have it. From 1195, it went down all the way to that 1,100 rupee mark. So a lot of the bad news may have been in the price because the street was expecting weaker than consensus expectations, which has played out. Also, a second reason for this intraday recovery that we are seeing is that management, at least as of now, is holding out acceleration in growth in the second half of the year or Q2 onwards, which is why they are steadfastly maintaining their guidance for the full year on revenues and on margins. So 6 to 8% on top line and even on margins at 18 to 19%. They're taking steps. Those steps include not giving the senior management any hikes. It means deferring the hikes for the rest of the employees. They're taking steps, but it looks like the management wants to get back to the guidance that they have laid out at the beginning of year. So that is something. Just on this ER&D, since you brought it up, keep your eye out on L&T Technology, because if ER&D is weak for one company, in all probability discretionary spends for another company like L&T Technology could also be on the weaker side. Here we are not picking out KPIT Tech because KPIT Tech is an auto ER&D. 100% of its revenues comes in from the auto space, where the outlook appears to be promising because HCLtech has gone ahead and made an acquisition of an automotive company called ASAP. So I would just keep my eye out on L&T Tech when they report the numbers as a flow through of what we've seen from HCLtech.
Yeah, okay. And I remember one of the